All right, let's go.
Okay, now before we get started, one thing you left off, I run a career support group for people that are in career transition. That's a real heart thing I have. I also, for 20 years, as Wes had mentioned with his fantasy writing, I helped run Mid-South-Con, one of the largest science fiction fantasy conventions, for 20 years. So whoever won the comics and collectibles gift certificates with the auction, I will go shopping with them if they want to have guidance. All right, you and I are doing a date then. So we'll circle up later. So now, okay, there I am with like a professional photo with a tie and all. So it's like, I do clean up. And, are you ready to file? Because you know what? There's a tax code for the uninformed and there's a tax code for the informed. So which ones do we want to be?
Informed.
Informed. Bingo. Let's go to the next slide. Okay. So this is gonna be a pretty fast pace. I'll put a disclaimer in here. This is not inclusive. Okay, we're gonna hit organizational items. We're gonna hit individual items, some small business concerns. We got, how many people in here have real problem? Okay, you guys are gonna be feeling it. And then you got resource, and I'm not gonna leave you hanging. I got resource links, kind of the old, wait, there's more. Yeah, there's more. So, okay. Oh, and how many people remember Steve Martin and the Russian weightlifters? Here to pump you up. Okay. All right. See, I'm bringing the energy level up. All right. Everybody repeat. Do not be the shoebox guy.
Do not be the shoebox guy.
Okay. Now, I built part of this using AI. It was an interesting experiment. I have opinions that it's not necessarily, you've got to be very careful. It will hallucinate the crap out of you. But the shoebox and the clean desk image, because you don't want to be the shoebox, you want to be the clean desk, right? Right?
Yeah.
Clean desk. Okay. So let's start getting your records together now, or better, do it weekly, right? Okay. And I'm preaching to the choir. I'm as guilty of this as everybody else in the room. So you remember the little Japanese lady that was always doing her cleaning and her purging things? I can't think of her name at the time, but slow down, take a little time to preserve your sanity with a little cleaning and organization. It just helps. Okay, we all need to find, I actually use, for what I'm doing now, I actually use an expandable folder and a combination of digital. So find an expandable folder or a digital folder system that works for you. And this is just a simple example. A lot of things we do are now online. So we get email receipts. Print those off in a PDF format. Just drop them into a folder and organize them there. That way you got it. If you get it audited, there's your file. Hand it off to them. Please remember your charitable deductions, check your medical, and there's other deductions. The medical this year is restricted to like 7.5 of your AGI. So, it ain't, it's not a big percentage, but man, if you need it, then, God help you because you've been through some pain. So, and also one of the reasons we're talking about this is every year this stuff changes. So check your changes from 23 to 24 because you get caught. So let's go to the next slide. So some common things that impact. We're going from cradle to grave because it does happen, right? So we've got various changes in deduction limits, and you have phase outs that occur. Everybody here know what a phase out is? Okay. They give you a tax break, and then they decide that at year X it's going to be 50% or 80% or 60%. And all of a sudden you go out and you buy yourself a truck, and next thing you know, only part of it's deductible. So you got marriage, hey, that'll change your tax situation in a heartbeat. Ding, ding, ding. And this, I got burned on this myself. I'm gonna give you a personal story. Roth IRAs. My wife and I used to make all of our contributions at the beginning of the year, have it done, have it invested for the year. She had a coworker who wound up quitting. She had to take over a new client. She got an unexpected bonus, or I should say a commission at the end of the year. It messed up my tax planning, and we had to do a very rapid reclassification from Roth to a regular traditional IRA at the end of the year. Wasn't any fun. I mean, but so be aware. I mean, everybody gets caught, but marriage will change it. Having a child, how many kids got kids, take that deduction, you know. So that'll affect you. If you're buying or selling a house, hey, where my realtors at? You got expenses that can be deducted. You've also, and we had a gentleman that was in here a while back. He'd only been in his house for a year and a half, and he was thinking about selling and moving. And a lot of us are saying like, you'll lose your tax break, slow down, but put a contract on that house, but try and hold it if you can, because you want to push it out for a couple of months. So job change, promotion, and loss. Hey man, okay, where are my job seekers at? Okay, we all know that feeling, right? Okay. You get your 401k, your SEP, or your traditional IRA contributions, and taking those required minimum distributions. Ding, ding, ding. And then of course you have loss of a spouse, you have death, and you have inheritance. So let's go to the next slide. So now let's talk about a few numbers. And once again, this is not inclusive. I've only got so much room to play with. So 4/15 is our deadline. 10/15 is the extension. Be sure that you pay your estimated in April or you will get penalized. Okay. The standard deductions are up $750 for individuals, up to $16,600. It's up $1,100 for head of household to $21,900. It's up $1,500 for married and filing joint. The itemized deductions, they're basically unchanged, but many are scheduled to sunset. The prior Trump administration passed the 2017 Tax Act, and a lot of the provisions in it are scheduled to sunset in 25. So there are things that are going to revert. So be aware. And they couldn't, of course, now my political side, now that the election's over, we know we can start thinking some things are probably going to be made permanent, but some things will probably be allowed to sunset. So individuals can contribute up to $7,000 to an IRA, an extra $1,000 if you're over 50. Again, check your income limits because that can trap you. Individuals can put in $23,000 into a 401k, an extra $7,500 if you're over 50. And SEP, this is the benefit of being self-employed, you can do up to $69,000 a year. So, if you got some real income coming in, you can really shelter it. And actually, if someone's going to pass, this is a good year to do it because the current tax exemption is 13.6 million right now. And it expires in 2025, and it is going to revert back to the 2017 level, which is $5.5 million. It'll be adjusted. It'll be around 6.5 million after indexing. I did a quick Google. So, and the exclusion gifting, hey, if anyone wants to hand me 18 grand, you're my best friend. Okay, but you can gift up to 18,000. So
is that per person?
Per person. So yeah, you can give it to your kids. You can spread it around. So we're searching for those breaks, and you're trying to take care of your family.
A question. You said per person. Does that mean that somebody like a parent could give their daughter 18,000 and then turn around and give the son-in-law 18,000? Exactly. So they could buy a house. You can give to the daughter, the husband, and the kids. So it's per person. So 18 plus 18,000.
And you can do it individually. So Renee and I could give, if Ginger was older and married, I could give 18,000 to each, and she could give 18,000 each because it's an individual gift.
Is that per year?
Per year. So, and I just got the 10 minutes, so I got to keep rolling, guys. We're on the roller coaster. Woo! Okay, let's roll.
Is it gifting to anybody, nieces, nephews, friends?
You can give it to me, anybody. So, small business concerns. I'm gonna hit this, and boy, James, we've talked about this so many times, it's not funny. The LLCs, they're required to do their beneficial ownership reporting, but with FinCin.
Yeah, can I hop in?
Yeah, of course.
So our next meeting in December, we're gonna be talking about beneficial ownership, interest, is what he's talking about, BOI. If you own a small business and you have not filed with FinCin, you need to. They've given you 1 year to do it. If you don't, it's gonna be like a $10,000 a month fine. You need to look up. And you need to follow your business in there, make sure that both of you, because really, in my opinion, without being political, this whole act that they did, this Corporate Transparency Act, is where this came from. But the Corporate Transparency Act, in my opinion, is attacking on small businesses, right? Because now, if you have less than 25 people, you have to go in here and file, right? People that work for you, there's like several different steps that you can go through. Like big corporations don't have to file. It's only small businesses, and it's a big fine. So I'd make sure that you're aware of it. I just look into it. FinCin.
Yeah.
The governmental department.
And I got links for it, but,
if you're registered as an LLC, if you're registered as an S corp, if you're registered as any kind of company with the Secretary of State, you have to file once.
okay. So you get to the end of the year, if you're existing, if you create a new one, you got 90 days, minimum 500 penalty per day, maximum 2 years in jail and 10,000, like you were saying. This was based on anti-terrorism, fraud, and money laundering in the 2021 Corporate Transparency Act. That's a lot. Okay. The 100% bonus depreciation deductions on assets of 20 years or less is phasing out in 2026. So, if you can buy a truck, try and expense part of it, you better think about it now, because that's going away. Standard deduction for your mileage is 67 cents. It's up a little bit from the 65.5. Someone always asks that question, and you're like, let me look that up. Now, and this is kicker. Do not get yourself audited for this. In 2023 and 24, meals reverted back to the Tax Cuts and Jobs Act. During COVID, they loosened up the regulations. But business-related meals are now limited to 50%. So if Wes and I go and have lunch and I pay for it and it's a business discussion, I can't cover myself because it's assumed I have to eat. I can only cover him. So, and then in this is why I come to things like this. On the 15th of November, the Texas Federal Court overturned a Labor Department ruling on overtime rules that is restoring lower limits for white collar overtime to $684 per week or $35,558 per year. So it was supposed to be stepping up. The federal court in Texas came in and said, no, not legal. So if you have a person in your office that's working white collar job, administrative assistant, be aware. It's because you don't need to get caught on an overtime labor charge. Next slide. All right, rental property. All right, how many people in here are professional real estaters? Okay. Be careful how you classify yourself as a real estate investor. Are you an investor or a real estate professional? More than 750 hours a year, 50% material participation, and you can qualify as a rep. But IRS is watching. Don't get those passive losses reclassified because that'd be a surprise tax bill. So, hey, me, if I go in and buy a property right now, that'd be a huge mistake for me because I'm not doing what you guys are doing. So, Section 179, bonus depreciation, 60% for items placed in service in 2024. Buy that truck now. It phases out in 2026. Consider the cost segregation study if you're going to be doing a roof for any type of long-term improvement to the property. You'll probably need to do a cost segregation study to better expense and capitalize in the future. So if you're going to use a property for more than 14 days, it's considered vacation rental, Schedule E. If you're in it for 7 days or less, possibly Schedule C. That seems to be always a question that comes up. You guys in the real estate probably know that pretty well. You got safe harbor rules where you can expense up to $2,500 per an otherwise depreciable item, but there are limitations. We're rolling. Actually, we're gonna finish early because I started picking it up.
What's the difference between a real estate pro and just a real estate investor?
Okay, if I buy a house, there's no way I'm gonna be spending 750 hours of time managing one property. But if I have 10 properties, then I'm easily gonna make that mark, and I will probably more than be spending 50% of material participation. If you wind up using a property management firm, you're backing yourself out of it. So anyway,
So a real estate investor, so what's the difference in the write-off?
it comes down to your taxes and what you can, and how it is taxed as far as self-employment incomes.
And what's passive income, so
Yeah.
but basically that's where it boils down to, what's passive income. So if I qualify for this, then I can start to categorize things differently in my taxes, right?
Yeah.
So for you, I think that you get I think that it's more like mom and pops is what this probably relates to. Is
Yeah, because you don't want to you don't want to try and take passive investment income against regular earned income and then have the IRS come back and reverse it.
Got it.
So next slide. Thank you, James. And there's more. We've got reference links. Okay, if you need some spreadsheets, I found some cool spreadsheets for you. Here's some digital tools. We've probably, some of you are probably already heard these. But Quicken, Expensify, there's something called Bubble Up. Mile IQ, I have heard a good bit about. Stride Mileage. There's another article here from CNBC, and it provided the top 5, and it was FreshBooks. Notice that QuickBooks and Expensify showed up on both. So anyway, there's just some reference tools. Next slide. And number 2, because there's more, buy your Ginsu knife set now. Hey, man.
Hey, you're doing good, you're entertaining.
Hey, so, okay, here's some reference guides. You got your 1040, that's a publication 17, and publication 527 on rentals. Here's everything on the FinCin that I found that looked reasonably explainable. I tried to keep it to where a layman could get their heads around it. So you can go right here. Here is something about the qualifying real estate professional, and it had some court cases in it where things got denied and approved. I thought that was valuable because it would help define what you're talking about as far as their classifications. 179 bonus depreciation, and a little those 2 links there about some real estate strategies. And here's a good link. I found a good link on the safe harbor rules. So that's going to be it.
You're gonna email that?
We've got it. It can be emailed out. Yeah.
Yeah.
So long as you send out the one that has the one correction in it. I found a typo this morning at like 8.
Prompt Terry. Prompt Terry. That's another one.
Yeah, well, okay. Yeah, I was typing fast. All right. So what kind of questions we got?
You said buy a truck now. Tell us about the auto.
Well, it's a depreciable item. I mean, a truck is a depreciable item. So you could take 60% of that truck and expense it. So if you bought a $40,000 truck, you can take 60% of it. Well, actually, a truck's gonna run you what, 60 now, 80? So if you're gonna do it, now's the time to think about it. So, go out and see your car dealership before December.
Are you saying truck because of the weight limit?
No, I mean, I'm just saying the truck because most businesses are going to have to depreciate the truck, and yes, there are weight limits on them. So if you're in a business and you're using, say, a truck or heavy equipment, you can still deduct up to 60% of it right off the bat, and then the rest of it. Oh, and also I saw this, I didn't put it up there, but net operating losses, you can only take 80%. They're gonna force you to pay something. And the remaining 20% you have to carry forward. They do not allow go back. So you can't go back on a prior year. So just be aware of that too.
Very informative.
The FinCin, registering sole props are fine, right?
Oh,
We
sole
don't have to
proprietor,
sign.
you're
If
sole,
you're, if you're registered with the state at all, then you have to.
Years ago, but not now,
is it closed out?
no. You mean, I don't have a LLC,
Okay, you don't have an LLC.
I just have a regular business license.
If you're registered with the Secretary of State, you have to file.
Yeah.
I would go to the website, they probably
Yeah.
have some sort of matrix to walk you through.
Okay.
Yeah, I would go check this. I would check this mix out.
I just thought about
Thank you.
I would get on there and reference it. I'm not a tax professional, so I wouldn't want to get tax advice or any of that, but I know that you have to register, and if you don't, you're in trouble. So I get on their site, look and see what the requirements are. Maybe you have to have less